Am I Rich? Today we're going to talk about Sherritt International again. Yes, I talked about this earlier and I said, hey, this could be an interesting stock. What do you guys think? And I didn't think it was a buy at the time. I thought I'd wait at least 3 to 6 months to see where it's going. And so it's been over 3 months and they came out with earnings. Since then, the price was hanging around 42 cents per share and it dropped to 22 cents per share, which was pretty bad. And they had some kind of good and bad news in their kind of earnings report. So I kind of thought I'd go over a revisit on what I think about Sherritt International. So if you don't know what Sherritt International is, watch the other video and maybe I'll describe a little bit more about it here as well. So basically they used to have a few main operations. They do nickel and cobalt mining, maybe a few other things, but nickel and cobalt are the main mining things that they do. They also have some oil and gas business in Cuba, and they also generate power in Cuba. And they used to have investment in Madagascar, which after this last quarterly update, they basically said they're totally out of that. They overspent for that project and it really hurt their business a lot. So now that they're at 22 cents a share, what's the deal? Well, they don't have any earnings and their future earnings are expected to be negative, so they are losing money. Their price to book ratio is at 0.1, which is pretty cheap, but with a 5-year growth rate for their intrinsic value at minus 19.5% per year, for the last 5 years, it's looking pretty dismal. And now I also have some extra numbers here. That's in case they kind of have trouble paying their debt. They're going to have to restructure. So they have some backlog in money that could be coming from Cuba, and they might have to, issue more shares. So if you kind of look at a few different factors, you might look at their price to book ratio potentially being closer to 0.5. And maybe their 5-year growth rate at minus 35% per year, which is pretty bad. And anybody who bought this stock, I think around $15 and now is at like 22 cents, they're probably thinking, they lost it all already. Will it get worse, or is it worth hanging on to waiting for the next cobalt or nickel boom? So yeah, what do I think? Well, what it has going for it is a top quartile producer of nickel, or high quality nickel. Like as far as producing nickel at a cheap price, they're within the top quartile of companies around the world. And so that's one thing that's going for them. But there's a lot of things that are kind of looking bad. And the more I dig into this, the more I think it's a bit of a risky play. And so let's get into it. So when they're not earning, I wanted to look at what is the price of nickel that they need to have to basically be stable. And I think it's around $6 to $7 per pound of nickel. And the problem is that for the last year or so, it's been just a little bit above 6 or down to like $5 per pound. And as of late, I think this week it went down to like $5.30. So it's below that $6 mark. So I don't think they're actually going to be able to make money until nickel really starts to go up high. And they may also mention they had problems with cobalt, which dropped 70% in its price. Now it was kind of on a tear last little couple of years or whatever. So for it to drop more wouldn't be that surprising. Now, so if $6 or $7 is kind of what's needed for this company, but their current price is around, $5.50, somewhere in there, what would be the driving forces for nickel to go up? Well, if I look at there was one boom, maybe the last major boom for nickel was when the Chinese housing market and building market was exploding. And so people needed steel and stainless steel products for these building constructions, and they needed more nickel. And so there was a big demand for nickel, and nickel prices skyrocketed, and it was a bit of a housing bubble. And so, later on nickel kind of collapsed. And now people, their thesis on nickel is electric car motors. They basically think these motors need to be using a lot of nickel. And so if the world is going to go towards electric cars, then nickel is going to be in high demand. Now, some of the issues around that are that there's a couple things that have changed in the nickel game since that one boom in China, and that was one of them I mentioned in my last video was about pig nickel. So they made a process that they could use a lot worse quality nickel for making stainless steel products. So because of that, and stainless steel is like I think 2/3 of the use of nickel in the world. So it's the dominant component of what nickel's being used in. So most of the things the price will be subdued basically because of this lower quality nickel. Now higher quality nickel prices might deviate a little bit, it might be a little bit higher, but there's also, and there's a couple formations that people get nickel out of. One is, so what Sherritt International uses is this laterite nickel, which is near the surface, but usually doesn't produce as good of nickel quality, but they have a process that does this high pressure acid leaching process that takes the nickel out and makes a high quality nickel out of these laterites. So they have an more easily accessible deposit than the usual high quality nickel, which is nickel sulfides deeper in the ground, and they have a good process to process it. The problem is now there's a new process around that's coming out, and that's like the DNI process, and that could, it'll use less energy and it'll be able to work on more laterite deposits than the current technology that Sherritt's using. So this could be a problem for its competitive edge, and so that's one big problem I see when I look at these kind of improvements in extracting nickel out of the ground. They could easily keep nickel prices suppressed for a long period of time. And before these booms in China, you saw like nickel float between $4 and $2 per pound for like, I don't know, maybe 7 years, maybe a little bit more. And even if there's a bit of inflation in the price now, $6 to $4 a pound I don't think is unreasonable, and that could sit there for another 7 years maybe. So if that's the case, I really think they're going to have trouble maintaining a profit margin or any profit margins, and Sherritt's going to run into a point where they have to they won't be able to pay their debts, or they'll have to restructure their debt or something, and then they're going to have to issue more shares to investors. They may even go bankrupt, and that's one of the big problems with this company. So yeah, that's one thing I'm really worried about. The other problem is, they're in Cuba and they're also not receiving their money on time from Cuba for electricity. Now, there's another component that I don't think is as serious, and that's about the United States trying to sue companies. They're allowing a law to pass now that, or to be implemented now, that people who lost property in Cuba could sue companies that are using it now, and Sherritt International is one of those, but Sherritt International does not have any assets really in the United States, so I don't really see that as a big factor. I don't know that they'll be able to go after Sherritt for anything in reality, even though it is something that people think could be a problem. So I think the biggest worry is Cuba might not be able to pay them or won't be paying them on time, and the even bigger factor is that nickel prices may not go up for a long time, and so that's a huge worry. And then, yeah, they also have an issue with gas prices. So that's, right now gas prices are pretty low, or pretty reasonable. But if gas prices actually shot up, their input costs use a lot of gas. And so I think they'll have a lot of trouble being able to pay or maintain a profit margin between $6 and $7 a pound for nickel. So that's another problem. And even if these new processes are cheaper, they may be able to switch over to those in the future. So there's kind of two viewpoints I see. The negative side is nickel prices stay low. Maybe even Cuba doesn't even pay them on time, which doesn't really matter that much. But they won't be able to pay their debts. They could go bankrupt. That's the worst case scenario, I think. And it's got a reasonable likelihood to it, which is kind of bad. Now the good case scenario though would be that nickel prices do shoot up because of the demand of electric cars or maybe something else, in the next year or two, and then they are still one of the cheaper producers in the world, so they'll benefit from that, and maybe they'll be able to pay their debts, you know, get into a decent position, and any new plants or any new facilities that they start working on, they might be able to invest in this new technology and upgrade to it and become even cheaper at producing it and maintain their kind of strong point in the market. And after that, you know, it could continue on. It all depends on nickel prices, but if they could get to a more efficient point where they're, you know, still profitable at very low nickel prices, this company could be a very good investment in the long term. So that's kind of the positive thesis. I kind of think it's very risky, a lot riskier than I thought initially. And so I don't know if it's as nice of a stock, but I could be totally wrong. And I'd love to know what you guys think. Do you guys think Sherritt is a good buy at the moment? Or do you guys think, you know, in a few years it might be good? Do you think nickel prices are going to go up? Or do you think maybe the hype about electric motors just never will come true? Let me know in the comments. Otherwise, thanks for watching, and we'll talk to you in the next video.